today I've just thought I'd start with GST. I'm kind of assuming that if you're watching this video, you know how to do a general journal, you know how to do a general ledger, profit or loss, financial position. If you don't, let me know. I can make a video on that. I probably will anyway, and I will post that. So eventually there will be a link to that. Anyway, I've got a list of transactions here. They're pretty basic. So owner contributed cash to the business. So that's obviously capital. Bought inventory on credit. So we know what that's going to be. Now, if it says inclusive of GST, what that means is in that 72.60, that total price, that means as well as the price of inventory, that's also got the price of GST on top of that. So how we find what the GST would actually be is we go 7260. If we want to find the GST, we divide by 11. Oops, let me just put an equal sign there. Now that'll give us our GST. Now, if we then want to find the value of the inventory which we're buying, you can also go 7260 or divide that by 1.1. Whoops, let me check an equal sign there. 7260 divided by 1.1. Or if you've already got the GST, you can just times that by 10. Same principle applies, or kind of similar principle applies for the next transaction where it says sold stock for cash, where it says cost of goods sold is 600 and the stock that we sold, or the sale was 1,000, and then there's plus GST. So the sale itself is 1,000. Okay, so that means that if I've sold it for 1,000, if I need to find the GST on top of that, I don't divide by 1.1 because it's not inclusive. Okay, it's plus GST. I've got to add that onto that. So what I do is I go my equal sign, I go my 1,000, and I times that, or not times that, I divide that by 10. If I divide that by 10, that'll give me the GST which I need to add on top of that, which means the total value of the transaction and how much I guess I'm kind of going to be gaining in my cash at bank account will be 1,100, not just the 1,000 amount. Now, sometimes it gets a bit tricky. It's important to remember that goods and service tax, GST is a goods and service tax. So there are some things that will apply, that GST will apply, and there's some things that won't. So it's important to remember that things like when you're selling stuff, you've got GST, and if you're buying stuff like, I don't know, inventory or a new asset, like that kind of stuff, a lot of the time there'll be GST on it. There's two types of GST. There's GST credits received, and there's also GST collected. Now, it's really important that you understand the difference. Reason being is, one, you'll accrue from purchasing items, goods and services. The other one, you will collect or accrue from selling goods or services. So, for example, if you're making a sale, the GST account that you will use will be GST collected. This one here, yeah? Now, obviously, if that one is the one that you're using, if you're making a sale, GST credits received is going to be the one that you're buying. Now, think of it this way. When you sell something, you are collecting GST. You're collecting tax. That tax is what you're going to owe to the government. That's what you're collecting. Now, this GST credits received, this is what's going to end up being minused from your goods and services tax collected, and then that'll end up being the amount that you owe to the ATO or various tax offices, etc. One is a liability, that's GST collected, which makes sense because you owe that money to the tax office. Now, that means that GST credits received is actually a negative liability, not an asset, not an expense, it's a negative liability. Okay, So that obviously explains why you're going to end up minusing it from the GST collected. Now, this one here is going to be a little bit trickier, just because drawings will impact GST. Okay, so jumping over to the general journal. Okay, I've got over here, these are just my kind of list of transactions that I've got to put in. So I'm just assuming I just made the dates up myself. Okay, so first, obviously I got capital. Now there's no GST on that because I'm not buying a good, I'm not selling a good, I'm not selling a service, not buying a service, no tax. Okay, so I got my 20 grand, my 20 grand. Now, if you can, I like when I do my post refs to have 101 as my first revenue, 101 as my first expense, so on and so forth. By having that, it just kind of lays it out nicely so that if you need to look and see, I guess, kind of how much you have of a certain account, when you get to your general ledger, it'll help a lot. You can lay it out really nicely, and you can really easily find the balances of the account that you want. Next, as I explained, you've got your inventory here. Now, reason I did toys for days and not cash at bank is because it says sold on credit, so I'm assuming it's an accounts payable account. Now here I've got my inventory. Now the inventory is 6,600, okay, because I've taken off the GST, and then obviously I've got my GST credits received here. Now it's really important that when you do this, you make sure that obviously your debits equal your credits. So if you've got inventory and credits received, and then you've got your accounts payable, your cash at bank account, and the left doesn't equal the right, it means you've done something wrong. Okay. So I'd probably first look at the debit side where the GST is. Next one, okay, sold stock for cash, cost of goods sold 600, where 1,000 plus GST. Now on that cost of goods sold, it's just 600. You don't need to worry about GST. If it said there was GST on it, okay, you just have to minus it from that total and then put it in as what it would be if GST wasn't there. You don't need to include like minusing of the GST credits received. So I got my sales here. It's obviously 1,000 because it says 1,000 there. GST is 100, like I explained earlier, and then the 600 and the 600. Now, with the COGS and the inventory, it's really important that you have both. If you don't, it's not going to balance, obviously. So the COGS, because it's an expense, when you sell, it's going to increase. And then obviously because you're getting rid of the inventory, you're selling it, the value of that account is going to decrease. And since it's an asset and it's debit in nature, it's going to be a credit account. And it's not going to be a credit account. It's going to be credited. It's going to decrease by 600. Same thing here, where it's got the 930 plus GST, COGS 450. Same as that. I made a mistake here. That's meant to be 1101. Okay, so exact same thing. Sales, GST. Now, when you do it, obviously you're going to add the sales. When you do your sales and GST, that's going to equal, your accounts payable and your cash bank account. Internet, that's got GST on it because it is a good or a service. You're buying a product. So internet. So it says here for internet services, it's 495 inclusive. Now we remember that if it's 495, if we want to find the value of the internet, we go 495. 495. Divide that by 1.1. Now that'll give us the value of what the internet is. And then if we need to find GST credits received, we just divide that 450 by 10, and then that'll give us the GST, and that'll equal the cash at bank with the 495 inclusive. Same thing with rent. That's got GST on it because you're buying a product or a service. So I've got that there. It says 1,200 plus GST. So we remember to divide that by 10 in that case because it's not inclusive. And then that answer that we get from dividing it by 10, that'll be the credits received. We add that to the rent, and what that equals will be what comes out of our cash at bank account. Now, here I've got sales again. So that's that account up here. Sold inventory for COGS 2000, 5000 plus GST. Pretty self-explanatory. Paid complete amount owing, or received $500 cash for sale to the toy lady. Just because it's an accounts receivable account, we don't know the value of the GST. Most likely, it would have been paid in the previous month, or it would have already been settled with the Australian Tax Office. We're just waiting for the final payment. Here, Toys for Days, cash at bank. Since we paid up here on the 2nd, 7,260, or that's what we owe, sorry, because the transaction says we pay it in full, we debit the accounts payable account because it's credit in nature, and debits decrease credits, credits decrease debits, debits increase debits, and credits increase credits, okay? So if I want to decrease that, I debit it, and since I'm decreasing the cash at bank, I'm going to credit it. Now, same thing here, purchase furniture, 2,750 inclusive. You get pretty natural at being able to sometimes just look at the number and realize, okay, that's obviously going to be 2,500 and the GST is going to be 250. Okay. Now, same thing here for the draw. Actually, a little bit different for the drawings, or slightly similar. So you look at the total value of the drawing account. Okay. So if my total value of the drawing account, I've got $1,000 in cash and $440 in inventory, which is inclusive of GST. So if I chuck that down here, I've got my $1,440 there. Okay, I take out my $1,000 for cash at bank. Okay, I don't need to worry about that. There's no GST on cash at bank. Now, because it says that inventory is $440 inclusive of GST, that means that inventory is actually worth $400. Okay, and that would mean that the GST is 40. Now, the reason why we use credits received in this case and not collected is because we're not selling, okay? So we would have bought that furniture, we would have bought that inventory for $400 plus $40 in GST, okay? So if I'm buying something, it's going to be with a GST credits received account. So because of that, if that's debit in nature as a negative liability, and I'm removing it from the business, that means I also remove that credit. Okay, I no longer have those credits. What that means is that GST credit is obviously going to be credited, right? So now it'll decrease by 40. Okay, and I'll have to owe the Australian Tax Office 40 more. Now, what I like to do is after I've done my general journal, okay, just to check to make sure I haven't missed anything or to make sure my numbers all add up, I'll just go sum, okay, and then just select all of my debits in here, okay, and then sum all of my credits in there. Now, because they equal and debits must equal credits, it means I've done it right. Alright, that brings us to the end of the video. Thank you so much for watching. I really appreciate it. If you feel like it, feel free to leave a like, subscribe. Please comment if anything didn't make sense, or if you want me to make a new tutorial on something else, whether that be for other accounting concepts, economics, chemistry, or math methods. I will try my best to make a tutorial for anything that you guys want me to make. Alright, well, happy accounting or studying or whatever you're doing. Cheers.